The first thing that we need to talk about when we talk about taxes as a business owner is on understanding withholding versus your actual tax liability. As a W-2 employee, you make $500,000, you get paid via salary, it withholds for taxes, it does a pretty decent job. You don't really have to plan too much. For some employees, they do if they have RSUs, if they have large bonuses, etc., but not in the way that a business owner plans. A lot of business owners own C Corps or they own S Corps. And with both of those, you get paid a salary. So let's say you have a business, it's going to profit $350,000, you get paid $150,000 salary. On that $150,000 salary, it is going to withhold for you. It's going to assume you basically make $150,000 unless you make changes to it. It's going to withhold, let's say, at about a 22% rate. So on that amount, it might withhold a little over $30,000. But you also have $350,000 of profit from the business that is flowing through to your individual tax return. On that $350,000, some's going to be taxed at 22, 24, 32, etc. And it's also going to depend on your spouse. So a lot of times people say, oh, I had this withholding. Why do I owe so much on taxes? Well, that withholding doesn't know everything that's going on. Withholding is just a guess. And if you've talked to any of your W-2 friends, all of a sudden they'll go pay their taxes come April and they'll be like, oh my gosh, why do I owe $20,000? I thought all my taxes were taken out of my paycheck, but it didn't. Withholding is a guess, and it's a guess based on what you enter in. So if you enter in and say, I'm married, I make $150,000, I have exemptions for kids, it has no idea that your spouse might be making this much money and pushing you into a higher bracket. It doesn't know about your business profit that's taxed and pushing you into higher brackets. So you need to understand that withholding is a guess. It's very different than what your actual tax liability is. The other thing that you need to understand is safe harbor. Safe harbor is the amount that you need to pay in taxes per year to avoid penalties. There's two ways to do this. There is either 110% of last year. So let's say in 2024, you owed $100,000 in taxes. In 2025, you need to pay 110% of that equally throughout quarters throughout the year. So let's assume that you are a sole prop and you're going to owe $110,000. That means you need to do $110,000 divided by 4 and then pay that equally April 15th and so on through every quarter, with the last one being January 15th after the year wraps up. Even if you owe $300,000 in taxes, as long as you hit the 110%, you avoid penalties. This is a really good number for people who their income is growing or pretty similar. If, however, you said, hey, last year, I owed $100,000 in taxes. This year, I'm going to make significantly less. Then the other safe harbor option you have is 90% of this current year's liability. So let's say you were going to make $80,000 or you were going to owe $80,000 in taxes this year. You would need to get in 90% of that $80,000 equally through quarters to avoid the penalty. So it's either 110% of last year or 90% of this year. The issue is when you pay quarterly taxes, it's based on how the income is earned throughout the year. So let's say you earn your income, you're going to owe that $110,000. You need to pay quarterly. You can't just say, hey, January 15th after the year ends, I'm going to pay that whole $110,000 and avoid penalties. Nope. The IRS is going to go back and say, hey, you missed from April 15th. So now you owe interest on that quarterly tax payment all the way from April 15th till you went and paid it in January. You want to do it equally. If you have a business that's very seasonal, you can annualize this. It's going to cost a little bit extra with your tax team, but for most businesses, you need to do it that way. So now let's say you are that S Corp like I talked about before. You make the 150, you're going to end up getting a little over 30,000 through payroll. So what that's going to look like is, okay, 30,000 divided by 4. So let's say it's about 8,000 that you got in per quarter. If safe harbor was 30, that 8 is reduced from the 30. You need to get the other 22 in to avoid penalties. But here's one little trick. With your taxes, they have to be equally paid through quarters unless it happens through withholding. If it happens through withholding, it doesn't matter when throughout the year it was done. So a lot of times what we do with S Corp owners, they're going to pay some through quarterly or not. And then at the end of the year in December, we're going to pay a payroll and we're going to withhold whatever was needed for safe harbor. So let's say I have a business owner. He's going to pay himself $150,000. We know safe harbor is going to be $100,000. We could, to free up cash flow, we could wait till December, run the $150,000 payroll, withhold $100,000 for taxes, and because they hit the 110%, or in that example from before, if they withhold $110,000, they would avoid the penalty because they hit safe harbor and they got it done through the end of the year. So I basically view Withholding as an S Corp is like a Band-Aid. So let's say business started out not as good early in the year. You were worried in cash flow or you wanted to reinvest back in your business. You can wait and do that withholding at year end to avoid the penalties. Now we actually need to talk about how to plan for your taxes. Let's start with a partnership or a sole prop. So when you're a partnership or a sole prop, you don't have any payroll to yourself. So you're not going to have any withholding that is done. So when you're managing this cash flow in your business, you want to pay yourself monthly to cover your living expenses. But you don't want to pay everything out because you need to plan for your quarterly taxes. So if we use the example of you owe $100,000 in taxes, you need to make sure each month you're saving enough to hit that $25,000 quarterly payment. But on top of that, you also need to plan for what you're going to owe above that. So let's say Safe Harbor was $100K, but you're going to owe $200K. You need to not only plan for the $25,000 for Safe Harbor, but you need to plan for the other $25,000 you're going to owe above it. Time and time again, I see business owners not even plan for Safe Harbor, but then the next step is they plan for Safe Harbor, but they don't plan for what they're going to owe in April. And so when you run a business, the way to run it well is income minus expenses equals your surplus, what you need to pay in quarterly taxes, what you're going to owe above that. So then you can look in your business and say, oh, I have plenty of extra cash, I can allocate it. But what most business owners do is they don't do that. They have no idea what they're going to owe in taxes. They have no visibility on this. And they either hoard cash, they don't make any decisions. April rolls around. They're like, shoot, I pay this big tax liability, and they restart again. Or they spend that money and then April rolls around and they're really short. You need to have awareness. So what we do is we project out the business early in the year. We give tax estimates. After a tax return is due in the summer, we review that, map it out again. And then come the end of the year, we look at where the business is at and look at those tax numbers again. By doing this 3 times a year, people have the awareness and they have the ability to actually make decisions in your business. You don't want to be in the situation where you just have to hoard cash all the time, or you spend cash and then you're wondering, do I have to sell investments potentially at a loss? Do I have to go into debt to pay off the tax liability? This is one of the most important frameworks. When you start a business, yes, it's really focused in on generating revenue, generating profit, growing the business, but you also have to think about how to manage cash flow and how to manage taxes and how to avoid penalties. I have seen so many business owners paying $10,000 to $50,000 a year in underpayment penalties, all because they didn't plan well, and I want you to avoid that. Thank you for watching. If you enjoyed this video, please leave a like and go follow my page for more personal finance content. And as always, if you have any thoughts, please leave it in the comments below, and I promise to get back to each individual comment. See you next week.